Welcome to Bitcoin Escape Plan. Bitcoin just hit a critical level recently that we are going to go over in today's video that tells us everything we need to know about the future momentum of the price. And it's going to be a little bit different than what most people are telling you for. So make sure you stick through later to the video. I will go over the higher time frame so that we understand the broader context of why the price is behaving this way and why history shows us exactly what's going to happen, even if the news stories are different. And then at the end, I will go over the trade setups if you are still looking for 4-hour entries and just kind of what to pay attention to moving forward. If you are new to the channel, go check out bitcoinescapeplan.com, where every Monday I release an in-depth newsletter that gives a full breakdown of the price that you can look over when you are not here on YouTube with me. Just if you want to check that briefly, bitcoinescapeplan.com. Go check it out. Go subscribe. All right. Let's go to the 4-hour chart first. As always, this is the most important thing that just happened right here. This is the middle band of the Elder VWAP. This is drawn from 2011. So the price average going up from 2011 is what this represents. This is the middle band. The upper band is all the way up. I believe it is, should be this guy, which is at 84.3. which we will probably not touch. But essentially, for people who are not familiar with the Anchored VWAP tool, basically this is a magnet and this is a magnet. And we are waiting to see if the price is polarized to this one versus the other one. At the moment, us retouching that is not very good. Last time we touched it was over here in early March. And us breaking down to it, the one thing I will say that is good about it, if you look at these 4-hour candles and how they closed above it. They wicked below it, but they closed above it. We saw a minor touch of that trend line. Actually, it was a more significant touch. I actually redrew this trend line based on that break. But essentially, that's what we're waiting for at the moment is, do we maintain the overall shape of the chart, or are we going to see that breakdown and continue and fail this red trend line as well? That's kind of what we're waiting to see over the next couple days. And I'll go over this more in the higher time frame, just so we can kind of see what to expect on the weekly. And we only have a couple more hours until we have those levels, and we are currently way below we would like to be. So on the 4-hour, what we need to pay closest attention to is that middle band of the Elder VWAP, which is just the one that's drawn from the 2011 time. And then this is another Anchored VWAP that's drawn from the 126 all-time high in October. This is the bottom band. So sort of similar, where we're seeing the price get kind of crushed between the bottom band there, and then when it loses it, it gets pushed down back towards the middle band of the other one. And we're just going to see this getting tighter and tighter until we get confirmation of which way the price wants to polarize. And it will likely snap pretty violently whenever we get that decision. It'll either shoot right down below it or shoot right back above it. And that's kind of what we're looking for, signs now of which one it is. So at the moment, we're probably going to see another retest of this middle band, especially if we have a negative results here at the SMA for the 4 hours, which is currently at 66.9K. And I talk about this all the time with other circumstances. This 67.1K pivot, because the 4-hour SMA just dropped below that, that means that that realistically could form as resistance in the short term. Now, it's my understanding that typically if the price is negative on a Thursday and a Friday, that normally indicates that we will also see that on Monday. So initially we will see a drop off on Monday, and we just need to pay attention to where that is going to be. As you can see here, the Bollinger Band on the 4-hour time is starting to slope back upward, which is good. We could see a retest here that ultimately results in higher pressure, which I think is what a lot of people are expecting. But we'll know that based specifically on how does it continue to react to that middle band of the 4-hour Anchored VWAP. If we start getting candle closes below that, it's not a good sign. It's going to polarize the price towards going lower. And the bottom band is all the way down here at 36.7K, which I don't think we're going to see in the short term. We will go over that on the higher time frame in just a moment. So those are the two levels you really need to pay attention to, is basically 65.9K and right about 69K. Right around there. 69K is also relevant because that was the 2021 second all-time high. So very important psychologically speaking whenever we are at similar levels, and pretty similar to the 65.9K. That is higher than the first peak in 2021, but it's only a little bit higher than the 50% retracement mark from 126 being roughly 63. And that's really what we're waiting to see at the moment, is we need another reaction to the 4-hour SMA, and we need to get back to that bottom band of the downtrend anchored VWAP. Otherwise, we're going to see a break of the middle band, which will result in lower. So let's take a look at the higher time frames and see what the price is telling us. So right now, that's not good. Like, there's no way around it. That's not good. This would be the 6th month in a row that we have had negative candle closes. This, historically speaking, is pretty much as we see typically for that. There was also another one. Let's see. This, I think, is the most recent one. That's 5 candle closes that are negative. So it's not very typical. It is pretty atypical for us to see that many monthly closes in a row that are negative. So we would expect to see some upside pressure at some point. I just do think it's not going to be forever, like it's more likely that we continue to see a breakdown, and we are already well below the SMA. So it's possible, because we're left translated in this cycle, it's possible that we saw the lows earlier and therefore we'll kind of chop around and then start our recovery like here. But I'm inclined to believe that the price wants confirmation of 44K. So me personally, if you told me that the price was going to go below 40K, I would not disagree with you. I would think that that is possible, mostly because these levels right here, currently the point of control is at about 27K. So that's where the most human beings on planet Earth have bought Bitcoin currently. The next closest level, well, actually a couple of these are more, but locally speaking, the closest level is right around 67.6, which is more than double 27, considerably more than double. So basically we're seeing people here need to have strong enough conviction to hold up the entire market above. And this is a very important part, is we need to continue to pay attention to this part of the volume profile here. This one is continuing to fill out, but what we want to see is, does this start to thin? Like, does this start to have people who exit from that cost basis and higher because they realize, oh, okay, I'd rather take a small haircut than a significant haircut. That's the pressure that we're going to continue to see throughout the rest of the year. It is still my expectation, based on just the history of the price performance, that we are likely going to see another failure of the weekly SMA, and this is not currently what we want to be seeing. So I talked about this a lot, where we wanted to see it close above about 70.2K for the week. Obviously, we are not about to see that. We are about to see it be significantly lower than that, unless it shoots up in the next 2.5 hours, which I don't really see happening, So realistically speaking, that's going to put initial pressure back towards that 64K pivot before we are able to either break below that or continue one more time higher. But very similar to on the 4-hour chart, where we saw the 4-hour SMA break through a recent Fibonacci pivot, and that's going to force it to act as resistance instead of support. That looks like what we're about to see here. So in 2.5 hours, and I'll go over this more in tomorrow's newsletter and on Monday's YouTube video as well, we will see this, that's the SMA for the weekly, currently at 80.6K. We will see that probably touching this Fibonacci pivot. So once it breaks below that Fibonacci pivot, even if we do break the weekly SMA, it's not going to matter. It's going to go up temporarily, and then this Fibonacci pivot is going to act as resistance instead of support. So currently, that's what we have to expect for the price, is that we're going to continue to see failed attempts at the weekly SMA. There is zero historical precedent for us to reclaim the monthly SMA at this stage of the cycle. What does that mean? That means that the price will not be able to get above 89.7K for a significant period of time. Roughly, call it like 8 to 12 months, essentially. We've been below it for 4 months, which means we have a minimum of 4 more months and as many as 8 to 10 more months where we will be below that. meaning that, again, the price will not even touch that for another 4 to 8 months, let alone get above it. It's just the historically speaking context is that we stay below it for a while. This is the only one that's like kind of shorter. That's like 7 months roughly. That would be the shortest we could expect, but this stayed above the monthly SMA for a long time, even when it was dropping, and it did drop more significantly. That's about a 72% drop instead of a 50% drop that we saw from here to here. Now, obviously, a bunch of different narratives compared to 2018 to now. The ETFs come out here and permanently change the trajectory of Bitcoin, and it's quite possible that we are going to see some type of floor here, just from these IBIT buyers not wanting to give up their price projection. Like they have no reason to reallocate if they believe that they bought it for what it's going to be worth in 10 years from now instead of tomorrow. They're just going to sit, and if they have the cash, they're going to buy more. So it is possible that we're going to see less downside volatility than we would historically speaking. But me personally, it is not hard for me to believe that the price wants confirmation of that 44K pivot and may go significantly lower. There are a couple people who I respect deeply who think that it could possibly go to 80, 90 or higher. I am not currently seeing that. They make more money than I do, so it's quite possible that I'm wrong in that. But typically speaking, if we see 6 red candles in a row, we're going to expect a green candle not long after that. And let's talk about realistically where that can go. So I've talked about it many, many times. My original hope was this 96K pivot, but the more that we've gone over this in other videos, the more it really seems like we already had that. We had that in November and we failed it, and we continued to chop till we got it. We got that one more attempt in January, and now the price is done. The price has effectively moved on from that 96K pivot, and we will not touch it, in my estimation, probably until 2027, towards the end of the year at the earliest. Maybe even 2028, depending on how violently the price continues to drop down versus just sideways consolidation, which is quite possible. Like there's a lot more news stories that are favorable for crypto now than there ever have been before, although a lot of them are just continuing to fail. The crypto market structure bill is continuing to fail. Coinbase is continuing to reject the motions for it because the banks are really trying to limit stablecoin yield, which is functionally how Coinbase makes its money, the same way that the banks make their money with having savings accounts and CDs and all of the other ways for them to say, hey, let us hold on to your money. We're not going to do anything bad with it, but just let us hold on to it. That's essentially what they're fighting for between the banks and the crypto companies at the moment. The crypto companies obviously don't want to give that up, and quite frankly, you don't want them to give that up. Having access to stablecoin yield is one of the most appealing things of the industry, and just being able to shift from your assets like Bitcoin and other cryptos during market cycles back and forth into stablecoins will be highly impeded if they take out the ability to stake and earn yield on them. So that is something that we want to pay attention to. We'll have more confirmation of that in July, and it is my estimation that that is going to be another lower high in July. So what we're looking for at the moment, we don't really want to stay this long between these Fibonacci pivots. If we look for another correlation here, I think we still have them for this period of time. Very similar in here, where we chopped around for a long period of time, and then look what happened towards the end of March. We had that failure at that Fibonacci pivot after the retest of the weekly SMA. And look, it's doing exactly what I just articulated, where the weekly SMA was able to drop down below it, and then that formed as resistance. So I'm very much expecting the same thing to happen here, where this is going to force the weekly SMA to close basically right on that pivot. So in 2.5 hours, this will probably be down here. Meaning, again, this is likely going to form as resistance, even if the price is able to break back above the weekly SMA. So the highest that I can reasonably believe that the price is going to go is about 80K, assuming that we are still in the same regime that we have been previously, which I personally believe that we are. The 4-year cycle is almost identical. This looks so similar to 2018, 2014, and 2022. The only difference is we started dropping earlier, This is less violent than the other times, even though it really doesn't feel like it, but it's almost identical in a lot of terms. So all those people or other channels that you follow that say, the Fourier cycle is dead, I think that those people are completely delusional, and I don't really understand why. I don't understand what they get out of telling you that. Like, it doesn't make sense to me. The Fourier cycle is still alive and well until it's proven otherwise. And even then, I don't really think, even if we were to snap to the upside, I don't think that that means that the Fourier cycle is dead. It just means that we have less significant downside, which is the mark of a healthy market. Like, Bitcoin is one of the more volatile assets, so we shouldn't assume that it'll stay that way forever. Over time, as more and more money, more and more institutions come into it, it will get less volatile. That's normal, not a big deal. So that's what we want to look for now, is where does this weekly SMA get pulled down to in 2 hours and 20 minutes, and what happens when the price interacts with it. And I believe that it's going to react not favorably. Even if it does jump above it slightly, I think it's going to fail at that former 80K pivot, just because it's super important in those other levels. And you can see right here, it's struggling to even get to these levels, from these 2025 dips in March and April. So that is the important context for the higher time frames. Let's go over this trade for the moment. I'm still in tremendous loss for this trade. It is still my estimation. This is where I entered with a short, and then I panicked and flipped, and that was probably the dumbest thing I've done in recent memory, because I would have been correct. I would have been in like 110% profit right now if I just stayed with my initial gut. And I'm really still focused on this. I literally taught my mom how to do this the other day, and she's had 2 trades in profit just from taking trades on the 4-hour candle breaks of the Bollinger Band. And I will say, these aren't even good entries. And that's the really powerful thing about here, is like, I panicked here, and I don't even know why I did that, quite frankly, because I don't have a rule for getting the opposite side of the trade. I have a rule for taking a short in this instance. So it doesn't really make sense. I'm really trying to stress test my strategy so that I can understand in like all different market types, whether it functions or not. And it certainly does so far from everything that I've seen. So right now I'm pretty much just waiting for us to get back, I would say, to back above about 69K. If we can get back above about 69K, I will add a little bit to that position just so that I can get out quicker if we see another failure around 72. And then from that point, I'm just going to be focused on the short-term swings instead of trying to catch other ones. That's really what I'm learning from these perpetual trades, is you can have long-term exposure, and it is a valuable tool to be able to do that. But I think if you're looking at the broader context of, we still believe we're in a 4-year cycle and we still believe that we're going to continue to go down, I think that the trades are they should be shorter term duration scalps instead of focusing on long trades right now. That will change, but probably not until September or October. That's when it's really going to make sense to like actually sit in positions for a long period of time. I think there's going to be a lot of chop and uncertainty between now and then, especially with everything that is happening globally. So me personally, I'm not panicking, because we've seen a couple instances where it makes sense to add to the position, and in a circumstance where I was not already heavily invested over here, that would have been the time to buy a little bit more. But I'm kind of just waiting it out. Not super stressed about it, just managing the position, kind of teaching myself how to not panic while being in significant loss, and maintaining my overall bias, which again, as I said, is one more attempt higher before ultimately a failure of the weekly SMA. However, the weekly SMA is still above my initial cost basis, so not that concerned at the moment, just kind of waiting for it to play out. And even if I lose 30 bucks or 40 bucks on it, I'm not really concerned. It is what it is. So that's really what I look for, is the 4-hour Bollinger Band breaks on specifically the 4-hour. That is going to tell us when we have a clear either long or short. The interaction with the SMA or a Fibonacci pivot is going to tell us, should I close this trade or not? Now, obviously you don't close the trade there, that's where you're opening it. But there would have been a clear, okay, maybe I'll take a little bit off the table. Maybe I'll take a little bit off the table. Okay, we're starting to see some weakness. And then it would have been the same thing where, depending on how many contracts you have, here you would have been, you were wanting to be mostly out of it, even though it did go back up. So what I like about this strategy is I'm basing this specifically off of most times where we see 4-hour candle breaks of the Bollinger Band, typically the price will move 1% in the opposite direction before it goes wherever else it's going to go. So it's really good scalp strategy that I like to look for personally. And I think it's just going to continue to be useful moving forward. You just you got to be able to think on your feet, and you have to have strong rules for both your entries and your exits. And that's really all I've been doing the last couple of weeks, is trying to refine my rule set so that I don't panic when a trade is starting to go against me. If the structure is still holding true, which again for me at the moment is this guy, if we start to really fail below that, well then that sucks. I'm gonna have to take a significant loss on that position, and then that's what the next month or two is for me, is just trying to trade back what I lost, and that is what it is. It happens. I still like these so much better than trading option contracts. It's not even close. The comparison of how difficult it is to trade meme coins and option contracts compared to the Nano BTC perpetual futures is night and day. This is considerably easier. So same thing that I explained earlier on in the video, all that we're really looking for is what is the interaction with the 4-hour SMA. Is this initially going to react as resistance at that 67.1K pivot? And like I said, likelihood, probably based on where we're going to close the week, is that we are going to see downside pressure at the start of the week at least, and then maybe we see a recovery after then. But in general, price looks kind of ugly right now. So you kind of have to be patient. I do still think we're going to have another snap towards that weekly SMA, but in 2.5 hours, 2 hours and 15 minutes, it is going to be lower. It is going to be closer to that 76.2K pivot, and we'll have to adjust that accordingly. But the overall thesis is still that it's going to form resistance there, even if it breaks slightly above it, like it did here. And that's going to be an important time to flip to bearish, which I will do regardless of if I have to take a loss on the position or not, which technically I should be in profit by then. So just have to be very patient. So what I really have learned from these perpetual trades is you don't really have to panic like an option contract, especially you buy an option contract for a week or two from now, and you had a wrong entry or whatever, you're gonna lose your money, dude. You're gonna lose all of it. You're not gonna lose a little bit, you're gonna lose all of it. So even in this instance where I've lost a good amount of money, technically, I haven't really lost it because the price might still recover back to where I bought in, and therefore I don't really need to panic. And even if we look at this is the weekly time frame, technically that regards upside momentum. Now again, probably a good time to get out of that and flip bearish at that time, even though we won't be anywhere near this top side Bollinger Band. And that's why I really like the 4-hour more than the higher time frames for leverage setups. Is obviously some of these play out very, very nicely, but a lot of times you're going to see those same things form on the 4-hour more clearly than you see them on the higher time frames. And I think the higher time frames are better for adding spot than adding leverage, but to each their own. There's definitely a place for both of them. So let me know if you have any questions down below. Again, I will break down all of this in more detail in tomorrow's newsletter with the updates from wherever the weekly SMA as well as the daily SMA, which we are currently back below again, which is also not very good for price. We don't want to see that. We want to see a reclaim above, again, about 69K roughly. It's going to be super important. We probably won't see that until Tuesday or Wednesday at the earliest, and we'll just have to wait and see. So leave a comment down below if you have any questions, like and subscribe, and I'll see you tomorrow. Bye-bye.